Thanks for tuning into India Market Close, and it's a day of strength. Autos, metals have bounced, and which is why despite the banks not being up 1%, the index is up 1%. So look at this, nearly 0.83 or 0.89% for the Nifty 50 despite banks looking okay, because I think autos selectively have done really well for themselves. Metals have done reasonably well for themselves, and which is why I think the index is showing the strength that it is. Broader market should come up on your screen. Again, I don't think the gains are as strong as the index itself because mid caps and small caps may be slightly lower than what the large caps have done. Pull up the heat map and show you what's moving and what's not, and it will be autos and metals here. So Mahindra and Mahindra 4% higher. There's a call from a couple of experts in the last 24 hours on our channel. Coal India, JSW Steel, effectively showing the metal index strength. Then you have an iShares and a Maruti. So that's essentially the clutch of stocks which have done well. Adani Enterprises up 2.5%. There is strength in Britannia. So except autos and metals, if there are other stocks, this fit the bill. What is sulking today? TCS a little bit yet again, so about 1.5% lower, and some weakness in select financials. But mind you, Bank Nifty still playing its part with the 0.5% kind of a gain. But the likes of SBI, Bajaj Finance, etc., looking slightly wobbly in trade. But all in all, a day which is very strong, and we close the week at record highs. You couldn't ask for more than that in a week wherein we got that big Fed decision, and immediately after the decision there was a bit of uncertainty. So I think people will take this with both hands, Tamanna.
Yeah, absolutely. What a fantastic Friday it's turning out to be, Niraj, with definitely the Nifty celebrating. I mean, you could suck that the broader markets are not quite yet at that level as far as the party is concerned, but crossing 25,600 in style on the Nifty and holding out, and that's really the big takeaway. Let's just pull up the advanced decline ratio because before we go into the specific stocks that are buzzing this afternoon, and it's narrowed a bit but nothing to complain. Nearly 1379 advances to 720 declines, so a bit of narrowing there from the midday boost it's saying. But the next 1 hour also then becomes crucial for the kind of mood that we see in the markets. Let's come to specific stocks, and definitely defense is in focus. Defense is back in action. Now, one could argue that a Cochin shipyard is running because it's been included in the FTSE World Index, and that might very well be the case as far as Cochin is concerned, 9.5%. But Garden Reach also up, Mazagon Docks, Bharat Dynamic. I mean, one space which was completely languishing is back with a bang. BDL about 3.5% up, but Mazagon, Cochin, and Garden Reach, all of them between 8 to 9% up today. IIFL has been in focus since morning. The relief from RBI has been a big boost, and it continues for the stock, about 7.5% in trade even right now. Hutco is the other one that we're tracking this afternoon. Hutco is about 8.5% up. They've put out a statement that the PM Awas Yojana gives them a potential of up to 1 lakh crore loans. And that has been something that the street has been celebrating since this morning. Mankind Pharma also in focus, and this because of an Investec note which is bullish. It's come off the highs of the day, but still about 3% up. So no complaints on Mankind Pharma. Heritage Food is an interesting one because yes, they've said that they're going to begin their ice cream factory in Telangana. The stock is 5% up. But Heritage Foods also in the state of Andhra Pradesh, if you look at ownership, close to the leading political family right now in Andhra, and in the midst of this huge controversy around the Tirupati temple and the prasadam there. Remember, one of the biggest competitors supplies ghee to that temple, so a lot of that buzz around as far as Heritage Food is concerned as well. We spoke to the company today, and we'll play out a conversation for you later in the show. Indostar is the other one we're looking at. Indostar Housing Finance sale has been in focus in that stock, about 4.5% up. So definitely some buzzers there. Not saying that everything is up in the green, but enough to get people in the TGIF mood, Niraj. No doubt about that.
Certainly. In fact, it's a good time to try and get the TGIF umbrellas out, but also look at the last 1 hour very closely to try and understand what you can do with your stock calls and your index calls, and that is what we'll give you now. This is the segment, or this is the time When we give you an index call, we give you a bank Nifty call, and we give you specific stocks to trade in as well. Kunal Rambia, founder of The Street, joins us with his thoughts on the charts. Kunal, good having you. Thanks for joining in. Good afternoon to you. I'll start off with the big question first. The index up yet another percent, closing in at the weekly highs. The question is, would you go out and buy the Nifty? What is your Nifty call for the day?
Very good afternoon, Niraj bhai. Good afternoon to all our viewers. So yes, certainly we are near to the highs itself, but at the same time, we are extremely near to the peak. So I would not really be keen to initiate a buy at this point in time. The only reason being, in the trending market, we should be buying the dips, not near the high. And because the risk reward ratio will turn extremely unfavorable at this point in time. So Nifty, if at all, manages to come in a day or two, somewhere near to 25,400 kind of levels, 450 kind of levels, I think that can be a good level to initiate a buy. Extremely aggressive players can think of initiating a buy presently at this level itself with the stop loss of around 100 points, which comes to 25,580 on the spot level. But again, I always prefer to trade with the favorable risk reward ratio. So it's an avoid as of now on the index. Stock specific moves can definitely be taken.
Okay, so avoid the Nifty for sure. What would the call be on the Nifty Bank? Would you buy or sell the Nifty Bank today before we come to your stocks? What about Nifty Bank?
See, again, Niraj bhai, we saw Bank Nifty high somewhere on 4th of July, where the Bank Nifty made high of around 53,350. Just have a look at the today's high. It was at around 53,710, and right now it's below the previous high again. That's 53,400 levels. I think this level might act as a temporary resistance, and because we are heading for a weekend, so I would not really be keen to take up the trade here too. By any chance, in the coming week, we see Bank Nifty coming near 52,750 kind of levels. That's around 150 points lower from the present level. Approximately 350 to 400 points lower from the levels. I think then we can initiate a buy. But at this point in time, indices is a clear avoid.
Okay, avoid the indices, says Kunal Rambia. Very good afternoon, Kunal. Tamanna here. Just wondering, what are your top trades then this afternoon?
Good afternoon, Tamanna. So yeah, the counters which are trending in nature and which are showing good momentum, we can pick up those counters. The first is Marathon Next Gen. Have a look at this counter trading near to all-time high. It has given a fresh breakout. In fact, in today's session itself, the breakout was placed at around 690 and counter is right now trading at 710. So with the stop loss of 690 itself, one can initiate a buy, and the positional target on this can be 750. The second is Ramki Infra. The counter is in sideways consolidation and it's making a clear falling wedge kind of formation. From the extreme lows of 650, this counter has bounced to 690. I think this can also be taken as a positional trade with the stop loss of 670. One can initiate a buy and the targets can be 725. And the third counter, now this counter is again a bit of sideways consolidating counter, but the trend is extremely strong. That's IREDA. Now with the stop loss of around 220, one can initiate a buy on this. This might go a little slow, but because the risk reward ratio is favorable, we can initiate a buy with the stop loss of 220 and the targets can be 250. All three counters can be traded for next 1 week to 15 days.
Okay, IREDA is one of the top trades that Kunal is talking about. But I would say very clearly that stock of the day is IIFL Finance. What a seesaw it has been for this company. The stock has zoomed today after the RBI lifted curbs on the company's gold loan business. In fact, what's interesting is we'll quickly pull up and see what's happening to Muthoot and Manappuram, because at least in the first half of the day, these stocks were down. Presumably because of the competition that has now come back online. So 2.5% down on Muthoot as well. Manappuram also down in the red. Remember, nearly 2,500 outlets of IIFL Finance, their branches really, could not initiate fresh gold loans. In fact, my colleague Vishwanath Nair has more details on the story.
IIFL Finance saw a bit of positive news last evening where the Reserve Bank of India essentially lifted the restrictions that it had placed on the company back in March. So on the 4th of March, the Reserve Bank of India had said that IIFL Finance needs to stop its gold lending business with immediate effect. And that restriction was finally removed last evening. That's 7 months of destruction of value on its gold loan book. Remember, back in March of 2024, the gold loan portfolio was a little over 26,000 6,000 crore, which dropped to about 12,000 crore as of August. That's when the company had submitted a compliance report to the Reserve Bank of India. It seems that the compliance report has convinced the regulator that things are more steady now. Of course, the Reserve Bank of India had placed these restrictions in the first place because Apple Finance was seen to be non-compliant with a lot of norms of the Reserve Bank, specifically with regard to cash transactions, the way gold is valued, etc. And these issues have now more or less been resolved. That's how the Reserve Bank of India's restrictions have been removed. Interestingly, we reported yesterday that if the restrictions were not removed, then Apple Finance could face a rating downgrade. It was also looking at laying off employees which were involved in the gold loan business, simply because it had been 7 months of restrictions and no business growth was happening.
And just a programming reminder there, you will be hearing from IIFL Finance's chairman and independent director A.K. Purvar speaking with us on NDTV Profit at 3:30 p.m. So stay tuned for that conversation as well. Definitely the newsmaker today. Kunal, have you been tracking IIFL Finance on the charts? And is there more steam left there?
See, absolutely, yes, Tamanna. So this counter is on the radar, but at the same time, just again, in technicals, we give a lot of importance to the highs and the lows. 3rd July high was 535. Mind you, today's high was 560. It could not sustain, and it's trading near to 535, which is again near to the previous high itself. I would consider this zone to be like a strong resistance zone. Counter is trading near the low of the day. I'll be extremely cautious on taking up the new position. By any chance the counter manages to come near 510, we'll think of revisiting. But otherwise, this is a clear exit sign.
Okay. IIFL Finance 7.5%. Mind you, a clutch of other names also which were active might have come off as well at the broader end of the spectrum. In the large cap space, it's okay. What has done well today? The new kids on the block. So Bajaj Housing Finance in the green, PN Gadgil in the green. No such luck for Tollins Tires because that is still in the red. But Bajaj Housing and Gadgil certainly trading in the green in the session today. From among stocks which are spiking right now, I think Ashiana Housing has had this big move. So do watch out for that one. I'll pull up that stock, look at that spike there. Or it's rather not even a spike, a bit of a trending move higher. But it's done well, has Ashiana Housing. So watch out for that name too in the session today. It's difficult to get a call on some of the new listings, but some of the other ones, there's Ceylon Exploration which is up, and Linde India has also moved up a little bit. There's few names which seem to be doing okay, Kunal. Any thoughts, for example, on a Linde India, or for that matter, on a Vakrangi, or stocks like Chamanlal Sethia have gone up in trade today as well. So a lot of stocks flying around.
Absolutely, Niraj bhai. So I track Linde India very closely. Now again, this counter is absolutely trending counter. Let's not even look at 2020 lows, but 2022. The counter was near to 3,300, and right now it's at 8,000 on the weekly chart. It's a clear higher top, higher bottom formation counter. In the recent times, it actually came down from 9,800 to almost 7,000, which was again, a kind of a pullback in the entire retracement in the entire rally. And now it's clearly making higher top, higher bottom again. So if someone has a patience of holding and wants to go, positional on the market, I think Linde India can be bought even at the present level. The stop loss on this can be 7,800. That's little far away, but at the same time the targets can be 9,350, 9,400. It's a trending counter. Till the time it goes below 7,000, one can comfortably buy on every dip.
All right, another stock in focus is Vodafone Idea. In fact, we're going to have a more detailed conversation on this. Deepak Shenoy going to be speaking to us in a few minutes from now, so stay tuned for that. But we're focusing on what is the future, what is the path ahead for Vodafone Idea. Today, that stock sort of seesawing. It's recovered from the lowest point of the day, but still about 0.5% down. There's been a clutch of brokerage notes out today, a whole host of them, which have analyzed the big move from the Supreme Court and what it means for the stock price. Rucha has put this all together. Listen in.
So there is a big question on whether brokerages are actually questioning the going concern thing for Vodafone Idea or not. But let's look at what brokerages are saying with respect to this. Number one is Nuvama, as you rightly mentioned, it has maintained a hold with a target of 11.5 versus 16.5 earlier, and this still has an upside of around 10% from yesterday's close. Now, the big problem for Vodafone Idea that the brokerage house is calling out is that even after the FPO and tariff hikes, the balance sheet for Vodafone Idea is stretched. So as we saw a detailed analysis yesterday on the channel, we saw that around 70,500 crores are in dues with Vodafone Idea to be paid to the government, but the cash lying on the balance sheet is just 535 crores, so a huge sort of asset liability mismatch over here. Now, the brokerage house believes that Vodafone Idea needs three pillars to stand on. Number one was capital infusion, which is done, tariff hikes, which is also done, and number three was liabilities waiver, and this is clearly off the table now. Therefore, Nuvama has maintained a hold, and it expects that the focus now remains on the pace of subscriber loss, tariff hike impact, and capex volatility. Now, we have Citi on Vodafone Idea, which is a high risk buy call with a target price of 17 rupees slashed 5 rupees from 22 earlier, upside of 63%. Now, Citi says that even after yesterday's decision of Supreme Court of rejecting the plea, it says that this does not affect the ability to continue with planned network investments for Vodafone Idea. So, going concern clearly is in favor of Vodafone Idea is what Citi believes. And recently, just now, we got information from Goldman Sachs, where Goldman Sachs has come out with a note, and it believes that in order for Vodafone Idea to continue, it will require more and more tariff hikes in the future to bridge the gap between the outflow and the kind of free cash flow that it has. And Goldman Sachs also believes that Vodafone Idea will remain cash flow negative until FY31. So this is what largely we have on brokerages. A little bit of uncertainty by Nuvama, but Citi still maintains a high risk buy on the company.
Right. All right, Ruja, thanks for that. It's a difficult one to call, Kunal, but I'm tempted to ask this to you. It's had a corrective move now for 2 days. Is it forming, or is it close to any kind of a bottom formation? And standard caveat, I don't know if you track this one closely, but if you don't, we'll forgive you if you get it wrong, because it's just that kind of a stock. But what to do with the Vodafone now?
See, honestly, Niraj, we have been getting tons of queries when the counter was trading near to 16 and 17, saying that can we initiate a buy? And someone who is already initiated a buy, they were asking for the trailing stop loss. Now that time, the risk reward, as I mentioned, always in our conversation, I always give a lot of importance to risk reward ratio. So I always maintain my stance on this counter, saying that avoid this counter, clearly avoid this counter. But at the same time, just now again go back to the historical data and check out the bottom of October 2023. That was at around 10.20 kind of levels. After this massive fall, the counter is holding on to those 10.20 as a support. Also on the weekly chart, if I look at March 2023 low, which were at around 6 rupees, from there, this counter was making clearly higher top, higher bottom formation. Now it's in sideways consolidation. If anyone wants to actually take the chance at this point in time, I'll suggest two levels. The first is 10.20, which is the present level itself. And the second is, by any chance, the counter comes down to 8.5. These are the two levels to think of accumulating this counter. Though, we don't expect this counter to go and make double from the present level unless and until there is a higher top, higher bottom formation. But at 10.20, 10.40, I think the downside seems very limited. So yes, this can be initiated as a buy. On the daily chart, we have a hammer formation, which is supporting a bullish view. From here, if the counter manages to go above 11.2, then the targets can be 14.5 to 15 levels.
All right, 14.5 to 15 levels on the chart. So, Kunal Rambia here at least seeing an upside in terms of technicals. But what about the fundamentals? Deepak Shenoy joining us now, founder and CEO at Capital Mind. Deepak, great to have you on the show as always. It was just going through some of your posts today on X on Vodafone. And, the interesting thing that you also say is, can this really continue as a going concern? I think that's a big question on the mind of anyone who owns the stock, anyone who watches the space, and market watchers as well, simply because the next relief seems to be only if they choose to convert government debt to equity.
Yeah, but Tamanna, they can't even do that, because beyond a certain point, this becomes a PSU. And the problem with the PSU isn't just that, it's the way they operate, right? your hiring will change, the way you operate your company will have to change, because once you become a PSU, then you end up with a lot of restrictions on what you can do and what you can't do, the remuneration you pay to your employees, the diversity of your employees, all sorts of things will impact the way the business is run. So I don't think the government will want to become a 50% holder of this company, regardless of what it is. And they've had negative equity for a while. So if you look at their balance sheet, their equity is a negative 100,000 crores, which means their accumulated losses have made them wipe out their equity, and they're down another 100,000 crores. And this is after raising like 20,000 crores or something that they raised recently. So I don't think at this point, this is very comforting, because now they're going to actually have to pay this cash flow that has been accounted in the books, but they thought they'll get a relief in. And for the third time running, the Supreme Court has said, no, we won't rethink the calculations.
Deepak, what is fascinating about the way the stock has been behaving is how so much was being bet on the Supreme Court giving relief when there were no signs of the same. In fact, enough evidence to the contrary that the Supreme Court was not interested in entertaining any kind of relook at the entire case. It was attempted with relooking the AGR dues. That was thrown out. Then they came back and they said, okay, let's talk about how you've calculated the dues. Yet, a whole host of brokerages and research houses have come out and said, okay, this could be a big boost.
Sometimes the founders of the companies have more interesting companies, and you can't just go around saying things like, oh, this company is dead. So it's not fair also, I suppose, because nothing is dead until it's actually dead. And, sometimes companies trade for 3 years after they're dead, like in Jet Airways case. So there's no way you can actually say that, something isn't worth it or whatever. But, in my case, I'm actually concerned because I'm on the buy side. I don't want to buy this stock. I'll buy their competitors. I own their competitors. So I'm biased in that sense. But the burden is so huge. It's 100,000 crores. To make this company have 1 rupee of equity, you have to infuse like 100,000 crores into it, which almost is like, why wouldn't I just start a new company in this space directly? If I had to just infuse, if I had to just put in so much money just to get the company back to having a single, rupee in positive equity. But the bigger issue now is the cash flow that comes. Where are they going to get it from? It's going to be 29,000 crores in FY 25-26. And then for every year after that, for 4 or 5 more years, they're going to pay 43,000 crores to the government. Now, you can't convert that meaningfully. I'll give you an example of what this means. 70,000 crores is the current market cap. If they were to convert 29,000 crores to equity, the government would own about, 40 or 40%, nearly 40% of the company. They would dilute, they would give another greater ownership, and then the government already owns some 30% or something, or 25%. They will end up owning 35-40%, and then the subsequent year they have to convert another 40,000 crores. So I don't think this is feasible in the long term. This will end up with the government owning a bunch of shares which has almost little or no value. Maybe the best thing for the government to recover its money is to sell whatever shares it has today. At least it'll get 10 rupees per share.
So therein lies the hitch. There's this constant refrain, and this is at the end of it, right? I mean, we have learnt our lessons from Air India, and the government sort of pulled it along. We're sort of seeing that with SpiceJet as well. We had a statement today from the aviation minister saying that we can't let another airline go down. And that is the concern with Vodafone. I mean, investors today who are looking at Vodafone going up to 15 rupees, all the notes that are looking at it, at the end of the day are banking that the government doesn't want to duopoly. You will have to have a third player.
Well, I don't know if not wanting a third player means let an extremely, this is the Japan and Korea style of functioning, right? It's like, oh, you're bad, but because I don't want a monopoly or because of whatever other reason, I will let you survive. So even if you're a company that can barely run on its own legs, I will get some public sector bank to give you a loan and somehow you will survive. Why are we doing all this? It's like, capitalism means companies die all the time. And it's when companies die that new companies are born. So if this company were to go bankrupt, somebody would be able to buy its assets at a very low price. That low price will be enough for someone to set up the next version of this company at a much lower initial cost, right? So if you don't have this 100,000 crore baggage to begin with, then maybe you can run this company with 10,000 or 15,000 crores of fresh equity. Yes, the government loses the money, but this company was going to go to zero anyway. Shareholders lose money, but shareholders have taken the risk. That's what they're going to be in there for. So let the shareholders go to zero. Let the government maybe recover 5 or 10,000 crores or whatever the little new loans that the banks have given can be adjusted, and maybe this company can be revived with a 25 or 30,000 crore package from another private company. Why do we want to protect it? It can still go through bankruptcy and come out with a new owner in a better resolution. I don't see why we can't do that. We can still have three players, but we can have three healthy players rather than two healthy players and one not at all healthy player.
So, Deepak, good afternoon. Niraj here. Been a while, but they raised some equity capital at about 12, 13 odd, or 11 and a half odd rupees, right? That institutional money came in thinking about a resolution plan which could make the company healthy, because otherwise, why would people put in equity capital, GQG, for example? Now, are you saying, therefore, that this decision that has been not gone in the company's favor, if this hadn't played out this way, then do you reckon the company might have been a healthy third player? And is this the only reason? Or would you have believed that even otherwise the company was going down?
Yeah, so I think there was a question of GQG investing about $400 million. $400 million is about 3,500 crores. That is chicken feed in comparison with the 100,000 crores they actually need. So I don't think this is a meaningful amount of extra money that they would have got. Of course, if the government's dues were brought down to, 10, 15, 20,000 crores or whatever the company actually wanted, then you would have had this situation where this money that they've raised from the public, which is 18,000 crores, the promoters, which is 2,000 crores, plus these other people, maybe 5 or 10,000 crores more, that would have been enough to kind of keep the company afloat and running. In the absence of it, the government needs to get paid. That means next year in FY 25-26, they need to pay, I think October of next year, roughly a year from now, they're going to have to pay 29,000 crores to the government. Now, where are they going to get that money from? If they go raise it from equity capital, it's like, I'm sorry, I'm raising equity capital from you so that I can pay the government. It's all gone. I can't use it. So at some point, this starts becoming more difficult to imagine in terms of, any other thing than a planned bankruptcy, if you may. But I mean, a lot of things can happen. The promoter can infuse more capital. I don't know whether they want to. They've always said they won't, but recently they put in that 2,000 crores. Vodafone has written this off in its books completely. They are in their books. They mention India as we've written it down to zero. So they are not intending to put in more money, and they don't think there's a hope for revival for their stake in the company. So unless they come back and say, we'll put in some money. I mean, so many of these if conditions have to work for this company to survive as it is. Isn't it better that they go through a planned bankruptcy and emerge with a resolution plan that involves maybe a changed owner and therefore a chance to live? You will still have the three players you need.
So, in a way, Deepak, what you're saying is let's put it out of its misery because it's just going to get worse and worse. On the other part of it becoming effectively a PSU. Does that make sense from an Indian perspective? I mean, I was looking at the TRI data today. BSNL has gained massively. BSNL has had a good month relatively, more than all of the private players. Does it make sense for an exchequer, for the government, for taxpayers, for the government to go out and bail out Vodafone? It's essentially turning out into a situation where they have to bail out Vodafone, isn't it?
I mean, given that there is a solution that involves bankruptcy and a resolution plan through a bankruptcy, you can make it faster. We need to make our bankruptcies much faster. People drag them along, put them to court cases, take 5 or 6 years. In 5 or 6 years, Vodafone Idea will not have any subscribers left. If it were to do, you have to do a really quick, well-managed bankruptcy process. If you could do that, why would you try to bail it out with taxpayer funds? It's a terrible way to use our money. We have better ways to do that. Because what you're going to do by bailing it out is just pay yourself. So in the sense, if the government bought equity into Vodafone, all it would do is own more of a company which owes it money. Effectively, it converts its dues to equity, and then that becomes a little, unfair. We can't manage a BSNL and make it profitable meaningfully. How are we going to make a BSNL plus an idea profitable? And then it continues to owe 40,000 crores a year to the government every year for the next 4 years or something. I think that, that's something that it's not tenable. We should, at some point, the government will have to write down its debt. That's because the company simply cannot pay. But the new owner can come in without having all those past dues to worry about, and then you get a stronger player in the business. And, make sure that the current two players can't bid for it, so that you still maintain a three-person play. The bailout word does not really fit here. It is not so systemically important that the world will come crashing down if this company didn't exist. So I don't think there's a need for a bailout.
Yeah, so it doesn't need to be a bailout. If you want three players, let there be three healthy players. And what really is the way out? Planned bankruptcy is what Deepak Shenoy is talking about. Thank you so much, Deepak. Always a pleasure to have you on the show, and hope to have you back soon.
Thank you so much. All the best.
All right, we'll take a very short break. But on the other side, we tell you what is the Buffett indicator and why it's relevant for the Indian markets right now. All that, of course, trading calls and a lot more coming up on the other side. back. You're watching India Market Close, and it's looking like we're set for a fairly strong close. Let's just pull up the line chart for the Nifty before we get to our next speaker. You are pretty strong, above 25,700 now. 350 points up. What a fantastic Friday this is turning out to be. Amrish Balika joining us now. Amrish, time to pull out the party hats. All of the doubts of what happens after the Fed's jumbo cut. First, the doubts 25 or 50. Even after that, are we overvalued? I think all of those concerns down the drain, at least right now in the markets.
That's true, Tamanna. But then, yes, I mean, we have the index touching new highs. But then at the same time, I think you should ask, people across as to how their portfolios are doing. Because individual stocks, some sectors have been underperforming in the past couple of months. And I think the major one among them is defense, where I think people are just going after that sector in the last 6 to 8 months. And those who have invested about in the last 5-6 months are actually, watching at losses at this point of time. So like this, there are so many other mid-cap and small caps which have corrected quite sharply. So if you talk from a portfolio angle, I think quite a few people are looking at losses, especially in the last couple of months. Overall, if you've been there in the markets for the last 3-4 years, you still have made extremely good money. But those who have invested in the last couple of months could be finding it a bit difficult. So yes, I think we can cheer in the Nifty and the Sensex touching new highs. But then I don't think the portfolios are performing that well, at least in the past couple of weeks.
It's a day of spikes. Just before I come to Ambrish, Hindustan Foods, United Spirits, Mrs. Bector's, the list of stocks which are shooting up is actually very, very strong. In fact, if I'm not wrong, Bosch is the other one, which has actually had a very strong move as well. Lloyd's Metal is up in trade. Max Health, the clutch of names which are really zooming up in trade. Amrish, good afternoon. Completely buy your point. At least yesterday and day before, the mid caps and small caps have been a bit quiet. What are you doing currently, Amrish? Where is it that you would maybe put in fresh money to work, or are you right now not putting fresh money to work?
I'm not really putting fresh money to work. If I do a turnover of 100 rupees today, in that about 60 to 80 is a sell and 20 to 40 is a buy. So I'm buying very, very selectively. And that too, I'm buying where I see value. And being more of a contrarian buyer, I'm finding it very, very difficult to really pick stocks at this point of time. For the time being, I would prefer to be more in cash. Because, from the investor behavior, in fact, I've been watching the markets for the last couple of decades. So looking at the investor behavior, I think there are a lot of red flags at this point of time. Valuations are expensive, but no doubt, the ticker is always right because the sort of liquidity which is flowing in is taking the markets up. The sentiment clearly is positive, no doubt, and it can go further from here. But I wouldn't like to be a party to that rally, which I really can't justify from a fundamental angle. Because again, when we talk of liquidity is, a part of sentiment. And as and when the sentiment turns, the liquidity can disappear.
The view on that, Amrish, I'd like to know what you think on liquidity disappearing, or the fact that a robust mutual fund book is now built out and you have that much liquidity coming in from investors in the form of SIPs, etc., seems to be giving a lot of comfort. Are you not feeling that comfort?
No, that comfort is there as of now because, you have close to about 35,000 crores sort of flowing in both through SIPs and lump sum. And clearly, the mutual fund, the fund managers cannot sit on cash because they live on a day-to-day NAV. So they need to invest. Clearly, we are in a virtuous cycle at this point of time. But this, at the same time, we should remember that this virtuous cycle is being built on liquidity and not really on fundamentals. See, again, I'm not questioning as to where India will be in the next 10 years or 15 years. Clearly we'll be in a much, much better position than where we are today. But then, if you've seen the markets in the last so many years, it doesn't move in in one direction. There has to be corrections, and there too some deep corrections happen. And at this point of time, looking at the valuations, there's no way I can push investors to buy at such, high valuations, because we have always seen that whenever such things happen, it can carry on for a while. And when I say a while, this time we have seen it's carried on for possibly a year and a half. After we have seen the valuations have got expensive. You look at the Q1 earnings. I think they were among the worst earnings which we have seen in the last 4 years. So there are those red flags, but then, yes, it can go further, but I would like to be a part of that party.
Okay, fair call, as long as the decision is clear. But by the way, with the Nifty is now 1.5% higher. We are 25,800. We are 200 points away from 26,000. This is serious stuff. And look at the gains that are coming in. ICICI Bank is up 3%. This is a serious move in ICICI Bank, at least from the lows. That stock, in fact, 3.5%. Look at that spike there. M&M is up about 6% in trade as well. This is a bit of, it smells of a bit of basket buying, right? Because suddenly you don't see such buying happening in ICICI Bank of all things. So there's some serious up move there. Wonder what Bank Nifty is doing right now. Because ICICI Bank is now up 4%. Bring up the Bank Nifty. Look at that spike there. Kunal, you were not quite wanting to go out and trade the Nifty. But the Bank Nifty is leading this index higher. ICICI Bank is higher as well. Fundamentally, Amrish may be right. You don't want to be a part of this party because it's going nuts right now. But trading an ICICI Bank, a Bank Nifty, would you trade them? An M&M, for example?
Absolutely, Niraj. So when we started show and we were discussing from that level, I think Bank Nifty is up by 300 points more. And if you look at Axis and ICICI of the world, they are doing extremely well. So at this point in time, if you ask me to trade a particular stock, I'll go ahead with Axis Bank because it's still far away from the previous high and it's making clear higher top, higher bottom formation. So with the stop of around 1220, one can certainly initiate a buy, and the targets can be 1305 to 1310, probably in a week itself. I will not be keen again to buy ICICI because it's near to peak level. I think there is more room for the upside on Axis. So with that, consolidation breakout, I think that can be well poised for short-term trading also.
So banks are buzzing. I just want to pull up sectoral flows as well. Definitely banks are the heroes, and which is why you're seeing this kind of a jump up in the markets right now. What about IT stocks? Are IT stocks coming off? Not really. It's Nifty, Realty, all rate sensitives. So this is maybe percolating down the impact of what a global rate cut scenario looks like. So your rate sensitives, your Nifty Realty is up, your Nifty Auto is up. Auto, just phenomenal performance. Kunal, how are you feeling about M&M today?
See, again, M&M chart is very, very clearly strong. So in today's move itself, it's up by 5.5%. And now it's on the verge of getting a consolidation breakout of 3 months. Look at June high. The highs were somewhere near to 29.50. From there, again, it came down, cooled off. And July, it tried attempting again to give a breakout. It was a failure. This is the fourth serious attempt to give the breakout near all-time high. So yes, it's a massive range breakout with the stop loss of around 28.50. One can certainly initiate a buy on this, and the targets can be as high as 3100 to 3150. Keep just one thing in mind that here, as a trader, what's more important is to keep trailing the stop loss. So once the position turns favorable, keep trailing the stop loss and hold the position. I think to the extent, this madness rally continues, I think we can seriously make good money out of it.
PB Fintech is at 1937. I mean, these are now expensive stocks which are going crazy. PB Fintech is up 4% as we speak. Thermax is about 3.5%. And we spoke about the new kids on the block, PN Gadgil. Look at Mrs. Bector's. That's up 12.5% now at 2175. Ambrish, a lot of people are talking about consumption making a comeback. I mean, those moves are very sharp. So that need not necessarily be fundamental, because just in the last 1 minute that a lot of these stocks are spiking up. Any thoughts on Mrs. Bector's or any of these QSR or FMCG related names? It's not strictly FMCG actually.
No, see, if you're talking of FMCG, compared to the other sectors, again, you're talking of relative valuations as to how FMCG was quoting, say, about 4 or 5 years back as compared to the other sectors, and how it's quoting today. In that case, FMCG is looking decently priced as compared to others because, clearly post monsoons, it was expected that we will see the rural consumption really increasing. So from that point of view, if one wants to take a safe bet, yes, I think FMCG could be a safe bet. And there again, stocks like Dabur or HUL or ITC could be, some stocks where one can invest and possibly hold on for a while. QSRs, yes, I think something like a Devyani is where I think we can see some more upside. Something connected to that, Zomato, has been doing extremely well. At least there I still see further upside because of the sort of a growth they've been showing and the way they've been able to acquire companies and turn them around. I think that's proven. So Zomato is one where I think we can still see further upside.
Some of your defense plays, that's an interesting space which has bumped up today. Cochin Shipyard, Mazgaon, Bharat Dynamic, Garden Reach, all of them, sitting pretty at great rates today. I just want to get Kunal Rambia on this first. If you're sitting with this stock, are you going to offload right now, Kunal, considering that all of these companies have had quite a bit of a patchy couple of weeks?
No, certainly not, Tamanna. Actually, in fact, in the trending market, as I mentioned in the beginning of the show itself, we should be capturing the rallies which are ongoing and buy during the correction itself. So let's just take an example of Garden Reach. Now, this counter was trading at around 2750. From there, it has come down to 1700. It's consolidating for a while. It's been almost a month. It's not breaking below 1650, 1700 kind of levels. And now it's showing good up move again. The volumes are picking up and the counter is trying to make higher top, higher bottom. So I think these are the counters which are trending rather than buying near the extreme peak level. If these counters are available at the discount of 35-40% from the peak and similar volumes are again seen on the buying side, I think I'll go ahead and buy these counters at this point in time rather than buying probably a month before this. So Garden Reach, I think well poised with the stop loss of around 1680. One can initiate a buy and the targets can again be 2250 to 2300. Mesgaon Dock again is a second counter which I love the most with the stop loss of around 4,000. And the targets can be 5,100 to 5,200. Yeah, they are trending counters, good from short-term to long-term point of view.
Look at the stock price of Bombay Stock Exchange, by the way. That stock is nearing 4,000 now. And frankly, this is, if you look at the 1 month chart of BSE, that tells you what a bull market looks like. 47% for an exchange wherein nothing material is changed but for the fact that NSE seems to have gotten one hurdle out of its way for its proposed IPO. But 47% for Bombay Stock Exchange. This is serious stuff. Amrish Baliga, there is a school of thought which says that if indeed the exchanges are forced to take one major exchange, so NSE has dominance in two, they might have to give up one, right? And that could be BSE's gain. But otherwise, I'm just trying to understand what has changed for BSE to be up 47% in a month?
Nothing really. Except for the fact which you mentioned, NSE is one step closer to the IPO, which again, we've been hearing for the last, I think, 10 to 12 years about NSE IPO. I just hope this time it comes. But the big question after that is, once NSE IPO comes and it gets listed, then what happens to the interest in BSE? So, the way it's moved up, I would say, in case we see the NSE IPO in the next possibly 6 months, you could possibly see BSE at lower levels when people start concentrating on the NSE stock.
Amrish, I'm just very curious to know what you think of the whole IPO euphoria in any case. NSE IPO already, we're seeing this sort of excitement in BSE before the IPOs even on the anvil. We've seen how recent IPOs have performed, so many more coming in. Are you trending towards any of these IPOs or are the valuation concerns there as well?
No, as far as IPOs are concerned, I think quite a few of them have been doing well on listing. So I think the game which most of the people are playing, and I think there's data to back that, and it's just not about retail investors or HNIs, even institutions I mean, they are just buying in the IPO to sell within a month from listing. And I suppose quite a few people get out within a week. And why not? I mean, if you're making, 2x or 3x within a very short time, I mean, why not book that and keep rotating your funds? Because the way the IPOs are coming, and I would say not just like the main board IPOs, you even look at the SME IPOs. I mean, quite a few of them have become sort of 10 baggers and 15 baggers. I mean, does this mean that the promoters and the merchant bankers were so naive that they gave the stock that cheap in the IPO? I don't think so. So there is something more than what meets the eye. But as long as the going is good, utilize the opportunity, invest in IPOs, and flip as soon as it gets listed. Because quite a few people have made good money by doing this in the last year and a half.
Well, but some of these points are so well pointed and taken. But right now, as Ambarish said, the going is good. And while the going is good, it just looks solid. Look at, by the way, just before we get in one more very big market voice, just Markson's Pharma is one more thing that I wanted to mark in addition to the Nifty 50, because it's the Nifty which is the big one. But look at Markson's and some of the others, and look at those spikes there. Mihir Vora, CIO of Trust Mutual Fund with us. Mihir, did you put some oodles of money to work? There's just some serious buying that has happened in the Nifty and specific stocks in the last few minutes of trade. What's happening? We are 200 points away from 26,000.
I wish I had oodles of money, but I'm a small fund, Niraj.
I was talking about Mihir Vora, the personal investor.
That's even smaller, much smaller.
No, but really, what explains this euphoria? There's some craze out there today, Mihir.
No, so the big event was past us, the Fed policy decision, and obviously it was a pleasant surprise. So we are basically back to that Goldilocks situation where the markets believe that the US will go in for a slowdown, but a soft landing. Global liquidity situation will be nice. Dollar will not be strong, which means risk on for emerging market assets. And India continues to be the lone shining star in a world which is starved of growth. So to that extent, I think we have a situation where interest rates can only go down, and India seems to be the only bright star.
This is foreign flows coming in, Mihir, you think? Hi, Tamanna here. Good afternoon.
Hi, good afternoon.
Foreign funds finally making their way to India. Is that what we're seeing? More of the same that you expect? Because, viewers right now are going to wonder whether this momentum continues and whether they should plan their investments like that.
So first the foreigners stopped selling. That was last month, a month before last, and then they started buying. And if you see every day, they are also increasing their positions in the F&O segment. The Nifty derivatives and the stock-specific derivatives is seeing an increase in the foreign participation. So there is a build-up of inflows from the foreigners. But still the amounts have been very small. But first the negative stock became zero, and zero has now become positive, and it's backed up by the F&O data also. And I think that's a virtuous cycle, because the locals also sense that there is lack of selling from the foreign side, and local flows, domestic flows anyway have been strong. There is some cash in the sidelines also. So that liquidity which was on the sidelines is now probably being put to use.
Okay. Mihir, what I remember, so, okay, actually forget what's happened in the past. My question is, if you are putting your money to work right now, I am presuming some of it might be coming. I mean, is it going to banks? Is it going to chemicals, pharma, some of the slightly better valued pockets, or how is it currently?
So the recent couple of months, the incremental flows have gone to pharma. Some of it has also gone to the consumption space on the discretionary and FMCG side. And it's also gone to the non-lending financials, I would say, which is basically your wealth managers, broking houses, asset managers, those kind of names. So essentially pharma and domestic financials and consumption.
You're seeing a rebound in, rate sensitives as well. Wondering how you're feeling about those, Mihir. I mean, today, a Nifty Realty nearly 4% up, a Phoenix Mills, Macrotech, Sobha, all of them flying, autos, M&M, you're seeing what's happening there. I'm wondering how you're feeling about these two buckets.
So auto, we are still not that overweight. Auto ancillaries we are overweight on. But in general, this was bound to happen at least for a day or two because the big decision was the rate decision by the Fed. So rate sensitives are reacting to that. Now, whether they sustain or not, we'll see. But in general, I think real estate has been doing well, and this was one more trigger for the sector to kind of get further re-rated.
My God, Mihir, I'm befuddled here. We've looked at the market so many years. Nifty Realty was up about 1.5%. It's 4% up now. Is this smacking of some bit of basket buying that is happening, or what is it?
It is possible. My guess is that you should see some good foreign numbers today, FII numbers. That's what it looks like.
Yeah, because ICICI Bank is also up about 3%, and you don't normally see just such a sudden spike out here. Okay.
And usually these day-end flows are typically more FIIs. I don't think domestics wait till the last 15 minutes of the market to buy.
Yeah, that's true.
That's exactly what we're seeing. We're seeing the last 10 minutes have become completely, fantastic. In fact, you're just 12 points away from all-time high of the Nifty at 25,831. And it's a race. Can we do it in the next 5 minutes? All right. Thank you so much, Mihir, for speaking with us, and wish you a great weekend. Definitely one which is celebratory in mood as far as the markets are concerned. Yeah. All right. Quick call from Kunal Rambia. Before we start wrapping up the day, Kunal, I don't know, would you hazard a call on the index and BTST calls?
So Tamanna, again, at this point in time, I will not be really keen to trade BTST, but I'm sharing a call which can be taken as a positional call. The one is the Tata Technologies. Now, why this counter? Because it's in consolidation. Extreme low levels were seen somewhere in August, and now it's bouncing back. Right now, it's trading near to the high of the day. Consolidation breakout is seen right at 11:15 itself, and stock is trading at 11:30. And it's just picked up the momentum. I think with the stop loss of 1100, one can initiate a buy. It's a positional target which I'm sharing here, and that's 1250. One can literally go position on this counter. The second counter, which I like at this point in time, is Aarti Industries. Again, extremely oversold counter available near to the support trend line, which is connected by making the lows of 2016 to 24. Risk reward ratio is extremely favorable. So someone who wants to go position on this counter, again, from investment point of view, I think with the stop loss of 550, one can initiate a buy. The first nearest target can be 650 and the second can be 690 to 95 levels. So these are the two positional picks which I'm sharing right now.
Okay. Amarish, just one quick thing. You mentioned that you are buying very selectively, very quickly. Can you share anything that you've recently purchased fundamentally?
See, one of the stocks which we're purchasing is SJVN, which is a Navratna company, basically into renewable. They're having a huge capex now. Currently, they have about 2,500 megawatts. By FY26, they're talking of 10,000 megawatts. So it's about 4x. From that point of view, clearly we are buying it at this point of time because we have seen a decent correction. It had gone to levels of about 150, 160. From there, it's fallen to about 130. So here I have a price target of about 160 again. So at 130, I don't see much of a downside. Even if the market corrects, should not really correct too much. Whereas we should see 160 possibly in the next 8 to 12 months. But then if one is talking of the next 3-4 years, possibly a multi-bagger, but I would like to put a price on that.
Okay, Amrish and Kunal, thanks so much for joining in and giving us your perspectives. Have a fantastic weekend. Viewers, if you are wanting to do a BTST or a positional call rather, this is what Kunal Rambia had suggested. Buy Tata Technologies with a target price of 1250, a stop loss of 1100. The stock currently at 1134. So keep that in mind. And Aarti Industries is the other one which he's wanting a buy on. But let's get the heat map up on the screen. I want to see the green on the screen. And Tamanna, you pointed out Nifty Realty, rightly so. Wow. But just the way some of the others have done. M&M 5%. ICICI Bank is up 5%. I don't remember the last time in the calendar year 2024. Maybe I'm overstating it. Yeah. I saw ICICI Bank do this. But banks, JSW, almost everything has done well. The ones which are sulking are ones which are not seeing any kind of foreign flows, I reckon, because everything else is moving up.
It's foreign flows, yeah. And not just the typical HDFC Bank. You're right, ICICI Bank, perhaps one of those. even a Coal India, Bharti Airtel doing really well, autos overall, not just M&M. But let me just quickly pull up your advanced decline ratio just to give you a sense of the breadth of the market, because this is no longer just a Nifty story. The markets might have started off like that, but it's no longer just a Nifty story. This is an overall a bulls taking charge kind of market. Mid cap and small cap, just very quickly, because remember we started the show with the complaint that some of our experts were talking about, that people's portfolios haven't really done well. So let's pull up mid cap and small cap as well and just look at what's happening over there. Has your portfolio done well today is the question. If on a day like this, at the close of it, your portfolio is not done well, then you need to go back and look at your portfolio.
Yeah. But just one index, Nifty Realty. Tamanna pointed it, took my breath away. The intraday before we wrap up. We have a live show coming up, so we'll get to that very quickly. But Nifty Realty, just very quickly before we wrap up, intraday of the Nifty Realty. Look at that index. Brilliant up move there.
It's wow. Phoenix Mills, Macrotech, some of the two big movers over there. Do we have 1 second to show the BSE 500 top gainers and losers? That would be great to show what really has worked. Max Health, IRB Infra, a lot of defense companies also.
And a lot of PSUs, which is good to see.
Yep. Interesting day, but we need to close it here. That's all from Niraj, me and the team that put the show together. Stay tuned for a lot more on the other side.